Yo, what's good, guys? I'm back. Let me full screen this thing. I've been gone for a bit, especially from the lives, so I felt like, why not pop out, make a video on how I've been trading the past few weeks, maybe a month. I've been trading NQ. Haven't been trading gold or silver. Kind of took a break. Got rinsed a bit, not gonna lie. So yeah, I've been doing pretty good. I'm with Alpha, or not Alpha. I'm with Top Step still. I'm with Tradeify as well now, and I'm with Lucid. So we're with three firms. So I'm gonna make a quick 10-15 minute video about like some confluences that I use for NQ and a bit of how I trade it differently. So yeah, let's get into it. Let me draw this thing over here. Also, if you guys can tell. Oh shit. Wait, hold up. My bad. Okay. The mustache, the goatee. I know. Oh, fuck. We mogging now. It's tough, I know. So, we're in a little, some work done. Got a fireplace. Let's get into it. Try not to yap too much. Just get this shit done with, oh no, it turned off. Okay. Let's do it like that. Boom. Okay. So, I'm just going to use TradingView for this. Kind of walk down how I've been trading. Mostly, particularly the same. Higher time frame based. Rejection blocks, key opens, ICT structure, higher time frame PD raise, and draws and liquidity. That's it. So there was a really good setup that, I don't got premium, fuck all that. Let me break this down. I think this was Monday's trade, or I think maybe Friday. That two of my students, I think they took it, but they went, something happened, but, or no, they didn't take it because one of them took it and one of them didn't. I don't know, something like this, but they recognized the same exact level that I did on Friday, and it was a really good setup. Yeah, here it is. So, there was two levels. There was a long level and there was a short. First, the long, there's a lot I'm not gonna go really into depth because this video I'm trying to make pretty quick. So I'm not gonna break down everything piece by piece. But yeah, we're gonna be looking at Friday's price action, kind of break down that. First level is based off this hourly CE. You might be wondering how I identify the correct rejection blocks that I utilize. So if you want me to make a video on that, just let me know. But it's basically built off of internal lows and ICT knowledge. It's pretty simple. So I'll just make this black. We'll make CE of RBs yellow, and then I'll make key opens purple. So this is based off hourly CE, 4 hour, we had alignment on all the higher time frames, and then we had a lot of 15-minute confluence as well, which is my favorite time frame. It's aligned with the hourly and the 4 hour. So this was the first long level, or the only long level, or actually there was two, but the other one would have broke my rules because time. But the second two trades were based off of basically just key opens and structure. So let me go all the way back to this. Have some patience. Okay, cool. Should be here. Okay. Another reason why I really like this long, since it was all based off the higher time frame, daily bias as well, and we had clear draws and liquidity. If we look at all this low resistance liquidity, this built up LRLR, even just looking at the low time frame, it's pretty simple to identify with London highs up here as well. We just have a ton of built up of liquidity, just generating it, just these highs. I'll make this, maybe I should talk a bit more in depth. This high, this high, this high, this high. This is all in the lower time frame, but you get the gist of it. It's going to be aligned on the higher time frame. So yeah. Okay, delete these. So a bit more about this long. I also really liked it. I know one of my actually newer students Deja. Shout out to Deja. Oh no, and NG, my bad. They were looking to take this long. They didn't limit it. So I think they got a continuation off of a lower time frame entry trigger, which was like a 1 minute inverse, something like this. But this is the long level, 10 to 25 point stop. So you would have got away with like a 10-point stop, but I probably would have ran like a 20. I'd have to identify it on like the lower time frame. But if this was like a trade where, you know, my bias was to break all this LRLR, this just generated liquidity, probably would have just sized lower. Gave it maybe 30 points if I needed to, because I had a lot of, you know, upside. So I just base whatever my target is, base it with RR. So if it's a trade where I have like a lower range, like if it's like a, you know, 40 to 60 point play, then I'll size up heavier or regular sizing and stick to my 10-point stop. Or if it's a trade like this, I'll just size down and run a wider stop just to give it some room. Especially when, if we're looking at conditions and time, this is a few minutes, first 10 minutes of open. But again, another reason I like this area as well, and I talk about this a lot with my students, is I like to have higher time frame levels aligned with price during pre-market or really close to open. A lot of the times I'll be like low or high of day. So we had these relatively equal lows pre-market, which you can see here. So took those out. If we made an SMT, it would have been better. I don't know if we did. So another thing to look at. And we kind of treat this leg here as a manipulation leg. And then we can distribute. So a little AMD setup as well. So that was the first long. The second trade of that we recognized that my students took as well, or one of them took, I believe, was going to be a short up here I'm going to break down. But the first thing I'm going to mark out is our key opens now. The first one, which I'm going to mark these in purple. This is going to be our 10 a.m. open. You can see it's 7 a.m., but I have my time on Los Angeles. This is our 4-hour. The reason why I utilize this is because it's our 4-hour open during our most volatile session. So it's going to be a very strong key open. The next one I'm going to mark out is going to be our midnight open, which is going to be 9 p.m. my time. And again, like if you don't know how to mark these out, key opens are like the most simple shit to learn. So with this on the 1 minute time frame, you can see at 7 a.m., which is like 10 a.m. Eastern. It's just the first 1 minute candle, like where price opened up at this 4 hour. So you just mark out, if it's a bullish candle, you mark out the body low. If it's a bearish, you'll mark out the body high, where price opened on that 4 hour. Next is going to be midnight. Midnight is midnight during EST, so that's why it's 9 p.m. here. It's right here, so it's a bullish candle. We'll mark out the body low. Next is going to be true day open, which is going to be at 3 p.m. my time. Damn. It's going to be right here. Okay. Now another thing to point out is you can see I'm actually going to mark our daily open red. All key opens are going to be purple. Daily or true day opens going to be red, which is still a key open. Just because I wanted to show the show how close these are, right? Exactly, like basically on the dot of how close they are. So midnight and our true day open are very aligned, so it's going to be stronger level. I think I'm getting sick, bro. Okay, so yeah, there are the 3 key opens that I utilized during New York. That's it. So you can see we came up to this level. Now again, I don't use key opens. I'm just like a random level and be like, oh, maybe we'll hold here. Let's just take a gamble. I don't do that. I need to have alignment. So the first thing I'm looking at is this range, this leg that we created overnight. This bearish leg here. So I'm going to use OTE, which if you're watching this from the Discord, you should know I use this like a shit ton. If I'm looking for a leg, I'll identify it with just a high to a low. The only bad thing about this is that we do have equal highs. However, we had an SMT with ES overnight, and ES took out this high. So NQ didn't make equal highs, so it's a later target, but at least during the session since it is a Friday, and we've already distributed 200, 250 points. I'm not looking for a 300 to 400 point expansion, especially going into lunch, New York lunch, which I'll show you as well. So first thing of this range, I'm actually going to look at this high. You can see this on the 30-minute time frame. Some black. This is a mitigated gap. So again, I'm going off structure. We also have like an order block. This is on multiple time frames, but yeah, OTE inside of a higher time frame PD arrays is the GOAT. So I'm going to treat this. I have a video on this, I believe, on YouTube as well, as a protected high. So we'll just make that green. And then rejection blocks. We have this 30-minute RB here. Hourly. We have this hourly RB as well. 4 hour. We have a 4 hour body high that aligns with CE. Body high is just the low of the rejection block on the 4 hour time frame. So, and the reason why I wouldn't want to see us trace up to like the 4 hour CE maybe, if you were confused on that, is because we would break this protected high and invalidate our range if we have a strong push through 0.79, which is going to be the highest point of a premium in this case. Vice versa with like a discount, it should be the highest point. So don't want to see that break. So I'll mark out this CE with green. No, let's do yellow, and then we'll mark out 0.79 with yellow as well. So now I'm just marking POIs right there. Okay, and then on the 15-minute, again, just structure. What I really like about this candle is it doesn't have a wick to the upside. Oops. Make this yellow as well. These type of candles, I utilize especially on metals, but even on NQ and ES, you can see it's a pretty strong area. I don't know what they're called. It's just something I've recognized since I've traded more discretionary model. My throat is so dry. I don't know why. But you could treat these like rejection blocks. They're pretty strong draw on liquidity and like a POI. And then we also have like a 15-minute RB aligned. So now if we go to the lower time frame, the main thing that I feel like a lot of you guys struggle with, at least if you trade similar to me, is you might be able to like find levels like this pretty easily, but you're not recognizing conditions and what price is doing in the current session. So I'll kind of break down what that means once I get, scroll all the way back here. Need a mouse. Okay, we should be approaching this right now. Okay. Nope. Where are we, dude? Okay, this is Friday. Thank God. Okay, cool. Here we are. So now back on the 1 minute time frame. First thing we're looking at is, again, it's Friday, looking at conditions. We took out our daily objective, which is previous day low. I didn't show that, but we swept previous day low. Maybe made an SMT, I don't know. But the next thing I'm going to turn on is an indicator, which you guys can use as well. Actually, I'll just show you like this. It's going to be just ICT kill zones, pivots by TFO. Pretty simple stuff. So again, all these lines are like a level, and the best part is to have a level like aligned, especially with a key open or two key opens, and like a very low point radius, so you can minimize risk, have a higher RR. So the first thing I'm looking at is obviously when I was talking about expansion. We've already pumped 230 points off of my objective and our first long level, which is down here. We've had a pretty bullish AM session, and now we're at a POI. So even though we have equal highs, which we have an SMT, we're going to treat this level as, this range as like something protected. So first thing I realized is conditions again, which I talked about. Next thing is going to be like what price is doing. So as you can see, we're ranging here. First thing, like especially when we're creating a lower time frame range, is you never want to get caught in this. The way to do that is just to identify either manipulation or distribution leg. Now the only way I treat AMD, which is accumulation, which is right here, so range, manipulation, which is right here, and then distribution. The only way you can identify this correctly is if our manipulation leg, the way to identify if it's actually manipulation instead of distribution is just if it has to be chasing something, some type of DOL, some type of higher time frame level, some type of premium or discount, or some type of price. Another thing I point out, which not a lot of people talk about a lot, which this is just something I like to see, is that we're also in the low 25,000s. So it's a POI at the higher time frame. If we look at like the 15 and the hourly, which I don't want to scroll all the way back, you'll see there's a lot of consolidation built around, like I believe it's like 25,000 to like 25.2. So a good area. I treat consolidation as like, just support and resistance, supply and demand, whatever you want to call it. It's the same shit as order blocks. But again, what I was talking about was we accumulated. We had our New York lunch open here. So if I mark this out, let's mark this out in yellow you can't really see that. Mark it on red. Since this is our New York lunch open, we can now assume that this session could manipulate up, tap this higher time frame level, take New York AM highs, and then we could see distribution. What else I like about is this open at 9 a.m. We didn't make really a strong wick to the down end. We didn't take any gaps. We didn't take any lows. Nothing really, that we chased off this open. So treating this chase as a manipulation leg. Now, with executing wise, I personally, just from experience, I've gotten missed a lot if I don't take when I have a key open level, especially two that are aligned, like a daily open and midnight, which midnight's my favorite. I actually took a short today off midnight open, but I actually lost money. I can show that, but I would take the highest key open, which just it's like 25 cents of a difference, and just make sure that my SL is above my higher time frame level. So now if we go back to the 30-minute, or like all those rejection blocks in 0.79, right? I mean, I could always get a better entry, but if I'm fine with my risk, I'm gonna take a safer entry. Now going back to this protected high, that's where we're gonna have our stop loss at. And if you are still in the video and you paid attention to the beginning, you saw that I talked about how, like when we was talking about the long level, I was like, yeah, I usually will only risk 10 to 25 points. So as long as this fits in that criteria, which it does, then it's fine if I take it. If you saw it, it's a 20-point stop, so that's why. My bad, I know it's probably annoying. Okay, here we are. So obviously could have took 0.79, could have took these RBs, but again, who cares? I have an ideal stop. I could have hired my RR or my risk by 20 points to 9, but there's a pretty there's a chance that I don't get entered. So I would have took my key opens. And let me turn this off. It's getting kind of ugly. Next thing is obviously a target. So the simplest target would just be the low of our range. That's AMD. If it is manipulation, the next draw is just going to be the low of our range, which identifying a high and a low of a range is pretty simple. Are we breaking out of the low? So with this low, you can see we never broke it. With this high, you can see we ended up breaking that with manipulation. So first target obviously would be this low. So that'd be a 5 RR trade for 100 points. If you want to get risky, you could target our key open, which is our 10 a.m., which would have been a 7 RR for 140 points, which would have hit right here. So yeah, it's kind of like a bit of a breakdown. Next thing I like to see is obviously the hourly flip, which that's why I marked out our New York lunch open. And then we respected this area, tapping back into what looks like equilibrium, which we could trade off of this range now. If I TP'd at these lows, or let's just say I was trailing my stop loss during this trade, where would I, this is how I would manage my trade, is just utilizing our range, utilizing OTE, and time as well. So you can see we actually came back up to TM pocket, which is 665, and respected that with this hourly open, and then continued lower. So yeah, pretty simple. The last long that I said, this I wouldn't have taken this, but this is like a short-term play. This type of trade delivers a very high RR. The way I would have risked about this if I took the 4 a.m. or sorry, the 10 a.m. open, is I would look at the low of our 4 hour. Like, let's just say I'm still bullish. Identify the low of the 4 hour. So if the 4 hour makes a new low, then my bias is wrong. That's how I would treat this protected low, which I'll make green. So if you really wanted to take this, you're only risking 12 points. And depending where you're targeting, I guess you could target, 0.79 of this range if you want to be like crazy. It's like the highest I would say to target. So 08, right, if we're looking at this bearish leg. 08. Then that's something you could target as well. I don't know if that hit. Oh yeah, it did. So, that would have delivered like a 11 RR, so that's pretty good. I probably would have took it to this internal high, and just played it off of this leg, just because I was bearish. But yeah, that's like the highest I'd say you could take it. And yeah, so those are I feel like just like a few examples of like some setups that I recognize that my students took, and stuff like that. So pretty clean stuff. Beautiful PA. I know you guys probably said, I talked about it earlier, if you're still here, that I did take a loss on a midnight open trade today. I'm going to quickly go over that because it's kind of going longer than I thought, and I have a one-on-one with 2 of my students at 10 minutes. So I'll break it down really quick. So I'm just going to mark my midnight open. I didn't manage it correctly. It was the wrong thing. This is today, so go mark out 9 p.m. I was still bearish. Just kind of want to show you guys this based off more of a reaction. I believe I ran a 20-point stop because it was based off of, was it this high? I believe so. Let me mark this green. I don't know. So again, this is mostly all based off of the higher time frame. So no, okay, it wasn't based off that high because I didn't get stopped right away. Maybe I don't know where I have my SL. I know we had an RB somewhere in between this, so I know I have my stop above that. It might have been 25 points then. Oh yeah, I think it was then 25 points, something like that. But I had way lower draws. We had a lot, again, built up liquidity. I think I was targeting like 180 points on this. Yeah, it seems about right. Something like this. And I sized in pretty low, so it wasn't a bad loss, but I ended up getting stopped. And I don't think, yeah, this was more of a later trade, so kind of mid. But anyways, yeah, that was the video. Kind of going more into depth a bit about how I trade. Here we are. How I trade New York a bit. It's pretty simple, nothing crazy. I obviously left out like a good amount of stuff, but if you guys want me to make another video, you got questions, let me know.